This thing on. We're recording. Welcome back, everybody, for another market update for Calgary. All the numbers have come in, and the marketing group at Redline has prepared some really nice graphics and slides, and I'm going to take those and run with them. I'm going to tell you what happened to our market in March. You're probably hearing a lot on the news. You're probably hearing a lot of crazy stories about multiple offers and sold above asking price. And you're probably reading headlines in the news about, the overheated Canadian housing market. There's no such thing as a Canadian housing market. There's a lot of different opinions flying around and a lot of different headlines. So I just wanted to give you some facts and figures and try to make sense of this all for you. I don't like the idea of a Canadian housing market. There isn't really a Canadian housing market. What's going on in Toronto and Vancouver and to a lesser extent in other cities, Ottawa, actually all over the place. But what's going on in Toronto is a bubble. Like, it's out of hand. People are buying dumps on an 18-foot wide lot for like $1.5 million in a not great area by the train tracks. Like, I've shown a few examples in my stories. So I think some people are going to get burned on that. They're going to get trapped into some properties. And anyways, Calgary is heating up, but it's not there. It's gone kind of crazy. March was huge, as you're going to see when we go through these numbers. But we're not at that bubble level yet. What we have experienced, though, is we have transitioned, and it's been exciting as a realtor, as an agent, to go through this and wear different hats and play different roles for my clients. But we've gone from a distinct buyer's market where there were just way more sellers than buyers. Buyers had all the leverage, and that dropped off. We went into a balanced market at the beginning of the year, and now in most cases we can confidently say we're in a full-blown seller's market now. So it's a nice change of pace. It's a totally different game, and it's a lot of fun. It's exciting. Stuff's really moving. But even the Calgary housing market, I don't like to describe it as one monolith market, because when you break it up into the different segments, each of those has a little bit different story to tell. So I'll start with the market as a whole, and let me show you this graph here. And what this tells us is the 12-month trend, and this is all residential properties in Calgary. Okay, so if you look at this graph, there are gray bars. Okay, that's inventory. That's how much inventory is on the market. This goes back a year from today. And there are red bars. That's the sales volume. And then there's that white line, and that is the benchmark price. The benchmark is a composite. It's not the average price. It's a composite price of what a typical house sold in Calgary sells for. So you can see it's a pretty wild graph here. If you look back a year ago, March 2020, inventory was really high, sales were really low. April, even more dramatic. And as you'll recall, a year ago, we went into a state of emergency. COVID was spreading in our cities, and people were scared, and we locked down, and a lot of people took their houses off the market, and a lot of people stopped shopping. Buying a house was just not something anyone was interested in doing. And as you can see, over the year that recovered. We had a busy summer, and it's just kept going. And now this year, it's taken off like a rocket. Now the y-axis on the left of that graph, that's volume. So your inventory volume, and the y-axis on the right, that's your benchmark price. So you can see we've gone from like about in the worst part of last year to just over just over 400K, like 410,000, up to 445,000 that we saw last month. So prices have gone up. But this is this is the whole picture for Calgary. It's good news. The other thing that I want you to pay attention to is those bars and their relationship to each other. So if you look back at the beginning of the year, at a year ago, you had a very small, about that big, very small sales volume bar and a much bigger inventory bar. And the relationship between those, you could see that it's about 5 times the size. So, for every house being sold, 5 more were going on the market. So that was very much a buyer's market. There was a lot of product out there, not a lot of buyers. And even more dramatic in April. Look at the difference between the amount of sales and it was a little pretty scary time in real estate, but it bounced back. It's been good. But and if you watch the trend of those two bars, especially since December, you're going to see that gap close. And as that gap closes, that means that is the supply having a harder time meeting the demand. There's still more supply than demand, but not by much, as you're going to see here. So I'm going to go to my next slide. And this is the detached picture. So for detached homes, you've got the first box there is sales volume, and sorry, not sales volume, that's inventory volume. So 2,409 detached homes on the market. That's down 16.64% compared to this time last year. But as you'll recall, this time last year, people were pulling their houses off the market. Inventory was really low. Sales were really low as well. 1,866 sales. That is almost 171% increase year over year. So this is not just a good month compared to last March, because any month compared to last March would be good. That was a pretty rough month. It's actually just a good month in general. And to have over 1,800 sales of detached homes in March is really big. That doesn't happen very often. And also, I think over 1,800 in February. So it hasn't been since, I think, 2006 that we've had back-to-back months with that kind of sales volume. So sales volume is good, up 171%. Inventory down 16%. New listings, 2,613, up 94.5%. So you can see the sales went up a whole bunch. The inventory went up a whole bunch, but the sales went up even more. So again, when you look at the difference between those two bars, we're closing that gap, and it's getting harder for the supply to meet the demand. And if you've been a buyer in the last 6, 7, 8 weeks in this market, you've probably experienced, I know I've been through this with lots of my clients, where tried to buy a house and someone else beat you to it, or you've had showing scheduled and the house is sold before you even had a chance to look at it. A lot of that going on, and that's that seller's market condition kicking in. And again, that's a good month, even not just compared to last March, which was rough, but that's a good month. Average price on detached up almost 11%, $594,000. So, people that have a detached home, where we've been watching our values go down and going down this slide since the oil crash in 2015, and watching our equity evaporate. I know there are a lot of people out there that have been waiting for the right time to sell, and it's very clear this is the time. If you've been waiting for the right time to sell, that value is rebounded. It bottomed out. It's coming back, and I think the stats show that we bottomed out and we're back to about 2018 prices. Prices peaked in 2015 and then went downhill really bad. We're back. We've gone backwards 3 years in recovering those price losses. So that's a really good trend. Days on market, 29 days on market. So that's the average amount of time it takes to sell a detached home in Calgary in March 2021. That is a lower number by 38% compared to this time last year. And keep in mind that 29 days on market, that includes a condition period. So still most offer to purchase agreements are conditional sales, meaning there's a finance and a home inspection condition typically. And sometimes it's 10 days, sometimes even a little longer to get through that condition period. That's included in there. So from the time you put your house on the market till the time there's a firm sale on it, on average 29 days. That's quick. That's really quick. And then sold versus list price, that keeps going up too. You're hearing a lot of stories about, they got over asked, they got multiple offers and over asked. Still, on average, on a detached home in Calgary, sellers are getting 98.79%. That's in March of what they're asking. So that's an average, right? So we had lots of houses go above ask, but we still have lots of houses that people price them too high. If you price it too high, it still won't sell, even when the market's booming. But on average, that's really strong. It wasn't that long ago I was looking at these same reports, and that number was like 95%. And a swing of, almost 4%, that's a lot on a, on a $500,000 house. 4% of that, what's that? 20 grand. That's 20 grand makes a pretty big difference to most people. So um, that's the big picture for detached. I'm going to show you the trend as well. So this is that same graph that I showed you overall. This is broken down into subtypes. So this is for detached properties. Again, it's more dramatic here. What I want you to pay attention to is the relationship between the red bar and the gray bar. You see the white line, the price coming up, right? But the thing to watch is that relationship where they're closing the gap. Now, if that got to 100%, that would be like a crazy boom, right? We're already, I mean, in detached, I think we're knocking on 80%. So everything that's getting put on the market is selling, and it's selling fast. So good sign for sellers. Makes it a little tough for buyers, but still, if this trend continues, and we don't know how long it's going to continue, right? If it continued this way, we would see some huge gains this year, but there's no guarantee of that, right? Nobody's really willing to predict that this will keep going this way. The builders are getting caught up. They're building like crazy, in spite of their material shortages and stuff. And again, all those people out there that have been waiting for the right time to sell, I think the message is starting to get to them that, okay, let's put the house on the market. We can get what we need now. And we might see, especially in April, in May, when most people list their houses, we might see that inventory start to catch up. But the demand continues to grow. So, maybe this keeps going like this. In either case, definitely a good time to sell your detached home in Calgary. So I'm going to move to the next slide because we like to break this down by property type. And this is semi-detached. So that means semi-detached, that's half a duplex. You have one party wall. Okay, so there's been a shortage of supply on this too. Semi-detached are becoming a really desirable product because it allows people to get either more house for their money for the same 500 grand. You're going to get a lot nicer inside, a lot nicer equipped duplex half, or maybe a better location, an inner city location compared to a detached. So it's a nice transition type property if you're in an area where the detached home is out of your price range. Or you just want a little more value for your money. You want a nicer house with a garage, that sort of thing. So this has been really popular and it's been really undersupplied. So just 444 of those on the market. That's down 30%. It was already low. Sales up 134%. 269 of those were sold in Calgary last month. And new listings, 389. So as you can see, there's still more new listings than sales. So the supply is really trying to catch up, but the demand just keeps on blowing up. So things are moving in the right direction on semi-detached as well. Average price of that, $488,000, up 4.65%. That is a substantial jump. It's not the huge gains that we're seeing with detached houses, but it's going in the right direction. 38 days on market, not quite as quick moving as a detached home. If you try to buy a detached home in Calgary now, like especially under 500 grand, good luck. Like get in line, get up early, and write a really strong offer. That's how it is right now. But anyways, that's down 40%. So they're selling for more. They're selling faster, and sold price versus list price, 98.4%. People are getting what they're asking. So again, good sign. And I'll show you the same sort of trend lines on that. My next slide here. One moment. So there it is, that same style of graph. You could see a year ago the enormous gap between supply and demand. Red being sales being demand, and gray being number of listings being supply. You've seen that supply come down over the year. It's starting to recover now, right? They're starting to build more of these. Developers are getting really busy trying to build as many of these as they can. But you can see that red line getting bigger and bigger and bigger, and it's closing the gap, and it's narrowing the gap between supply and demand. So again, that puts upward pressure on the price and makes things sell faster. So again, seller's market on that type of product too. My next slide is for row homes. So these are your townhouses. And more good news here, right? So townhouses, meaning more than two attached. Some are condos, some are not. Depends on the ownership setup. But again, 877 of those for sale. A little bit lower inventory. There's still lots of those out there. It's still pretty easy to buy a nice townhouse, and I think we're going to see some sales volume pick up in there too as the gap widens between a detached and a row house. Those row houses start to look like better and better deals if detached keeps doing what it's doing, and before we know it, the average price is over 600 grand. That's going to price detached homes out of the market for a lot of buyers, especially first time buyers, and they're going to be looking at these row homes. So sold 152% increase over last year. Keep in mind, last March, pretty rough month, but even against a normal month, that's strong. 383 of those sold in March. 566 new listings, up 61%. Average price is up 327,000, up 7.747% over last March. So if you own one of those, if you're selling one of those, you might be seeing some gains in equity. That's good news. And days on the market, again, down almost 20%. 45 days is the average amount of time it takes to close a sale. Not to close it, but to have a firm sale, unconditional sale on a row home. And sold price versus list price, people are getting a little bit more discount on a row home compared to a detached or semi-detached, but even still, that's going in the right direction. Almost 98% people are getting what they ask. The next slide, I'm just going to show you the same thing. If you're getting a little deja vu, I'm going to show you the trend line on row homes. And this tells very much the same story. So you can see the price go down, then start to come back up, moving in the right direction. And you can see there's still lots of supply. So if you look at, again, the relationship between the red bar of sales, aka demand, and the gray bar of inventory, aka supply, there's still, it looks like, less than 50%. So still lots of supply on that product. And it's still relatively balanced market. If you're looking to buy one of those, you're probably not going to be up against multiple offers in a bidding situation, unless it's a really great deal, and then all bets are off. But still pretty balanced in that. The last one is apartments, and this is why we break things down between the different property subtypes, because apartments are a different story in Calgary. But again, there is some good news here. It's trending in the right direction, just very, very slowly, and it's still very much a buyer's market for apartments. So 1,686 apartments on the market. That's up 17%. So there's a lot more apartments coming on the market. People want to sell. They're selling against a lot of competition. 385 apartments sold last month. Now look at that number, up 76%. If you think about it, at the beginning of the pandemic, people are scared, and we don't know very much about this virus or how to treat it or what the effects are. Nobody wants to live in an apartment. So that really hurt the inner city, and that really hurt this category, which was already hurting. So people want to get out of those apartments, get away from those high density dwellings and living arrangements, get out of elevators and hallways that are shared, and get some space and get some safety and some comfort for working at home. So people have been getting rid of their apartments. A lot of product out there. New listings, 869 new apartments added to the market last month versus just 385 sold. But the average price has gone up a little bit, this much, but it is good news for once. So, and days on market, again, down a little bit, 53 still, takes almost twice as long to sell an apartment as it does a house. But that's going in the right direction. Same with sold price versus list price. We're still 96.5%. So people are still getting a pretty good discount off the list price of an apartment. But they're slowly starting to turn a corner, it seems like, as long as we don't get a ton more inventory pouring onto the market, which we could. But I've got a little prediction, a little hunch, and this is just my gut, but I think as detached and semi-detached start to skyrocket and then and price themselves out of range for a lot of buyers, these apartments are going to start to look like a really good deal when you've got something the average price is, you know, 261,000. Like the average price of a condo in Toronto is still like 800 or 900 grand, right? So this is still something that first-time buyers can afford. And once people are over their fear of the pandemic and we've moved past this and you know there's mass vaccination and that sort of thing, and people want to live inner city and you know go back to the office and when there are you know nightclubs and restaurants at the bottom of your elevator, people are going to still there's still going to be a group of people that prefer to live that inner city lifestyle. And as I said, as houses price themselves out of the running for a lot of buyers, I think people are going to start to run back to apartments and hopefully you know burn down that inventory a little bit, not literally burn it down. That's a pretty terrible comparison when I'm talking about homes. Anyways, chip away at that inventory and bring those prices up a little bit so that I guess long story short, this looks like it could be kind of rock bottom for apartments. So if you want to think long term, if you want to buy an apartment right now, you can have your pick. You can pick from 1,700, almost 1,700 apartments. You can get a good price. You can haggle with them. You can get 3, 4, 5% off your price, and you can get something really nice right now downtown for a pretty ridiculously low amount of money. So something to think about. And then just one last slide: the trends for those apartments. Again, what really stands out is the relationship of supply to demand, and there's still a lot of supply on there. You can see the demand starting to recover, you know, starting in December. It started to pick up slowly. It's just taking time, and you can see the price starting to recover as well. But at the same time, more and more apartments keep flooding the market. So something to think about. I hope you found that valuable, and you know, feel free to leave comments and subscribe to my channels and that sort of thing. I do this every month, but you know, things change every day. So a lot happens. A lot's going to happen between now and next month when I put up another one of these reports in April. Personally, for me, it'll probably be a record month. And all of my colleagues that I talk to, they're just having, you know, banner months here. Everyone's really busy. There's a lot going on. So I think you're going to see some pretty dramatic numbers again when we come back next month. But check in with me from week to week, from day to day. You know, I'm always on Instagram and Facebook. And I'd love to have all your questions and talk about real estate. So there's your answer to how's the market. And I hope you enjoyed this. And we'll talk to you next month.